start trading live again after December, 1st of January. So so yeah, it's going to be quite a big change going from demo to live. So in this session I want to address something that I've sort of noticed as I've been making these. You have to excuse my voice at the moment, I've got the flu. Haven't looked at the chart in a few days as well. I've realised I've had a little bit of hesitation about making journals because I'm still have a fear of taking a losing trade and then having to come here and explain that I took a losing trade. And I think, you know, no matter how much psychology I learn about trading, I still am struggling to accept the fact that trading involves losing and being wrong. So in this session I'm going to go through a few days quite quickly using the replay and we might have all losing trades, there might be winning trades, we might have a mixture, but the point is just to shake that hesitation. So this time I've got my rules written out from the last session. This was a trade I didn't take, this was a trade I did take. This is a daily fair value gap, this was an hourly fair value gap. You know, when I was looking at Wednesday here, I thought price was going to go to the sell side PD array on the daily time frame, but it would actually be more, it was actually in hindsight more efficient for price to first rebalance this inefficiency as it was closer before going up here. So we'll jump down to a 3-minute chart and we'll just see how this goes. So jumping back in here again, I need to remind myself everything I'm doing. So we've got London session lows. First things first is to just try and identify where the liquidity is. So we've got PM session highs, London session highs very close together, so I'm going to mark this out as well. Okay, the question I got to ask is, you know, has the liquidity already been taken for the sell side? I'm not entirely sure. I think I'm going to wait until the morning session begins to see you know, what happens. So first we just want to find the liquidity. Let's go forward. Okay, there's the morning session. Oh, wait. We're waiting for that Judas move, aren't we? Our bias is going to be bullish. Haven't really looked to see if there's any, you know, it might just be better just to see if there's any PD arrays on the downside here. So I'm not seeing any fair value gaps there. Go to an hourly, see if we've got anything to look at. See if there's anything that would, you know, go against our bias, support price going down. So we'll map out this. I am really ill at the moment, so you'll have to excuse me. So okay, we've got a fair value gap here. Start annotating this, see if we can build up a narrative. Let's see, where are we in regards to the weekly open? We're above the weekly open. And that might act as a magnet, so we should all weigh that into consideration as well. There's a good chance that price might be taking this sell side liquidity, might have already done it. Let's keep going. Okay, so morning session. Going to move up ahead, see if we get a candle closing above the sell side, and then I want to see a strong move away, and as soon as I see a fair value gap I'll pause and reassess. Just check that we don't have any economic calendar events today. Let's switch over to sell. Let's just look to see if we've got any bearish breakers. High, low, high, high. High, low, higher, high. Could always use this one. I think we'll use this high, low, and a higher high that takes liquidity. So final down leg in price that forms the low. Okay, so let's just jump up to a 5 minute and see what the final leg in price that formed the low was. So I guess we might want to look at this as the breaker. Just trying to think, should we just say the final down leg here, or do we include all of this as the breaker? Let's maybe just jump up to a 15 minute, see if this yeah, on a 15 minute high, low. I might be getting this wrong, but it sort of feels like that would be our breaker here. See if we've met any conditions yet. Sell side liquidity taken, market structure break, no. We've got a swing low here, so let's go back to a 2022 model. Let's actually, I've written these on the chart this time, so this time I can't forget them. So we've got sell side liquidity taken. Next we need a market structure shift to consider. Okay, so it's still going up. Okay, I mean, obviously there's a fair value gap there, but you know, that's not really giving me the I don't, if that is a fair value gap, does that has buy side liquidity been taken? I mean, we said the buy side was here, so I can't really see that being buy side liquidity, so let's, okay, we got some more movement here. Okay, that that looks like a, excuse me a minute. I really have the flu. I thought it would just be good to come in here when I'm sort of not at my best and try and test my skills. Okay, that is definitely sell side liquidity. That's a strong move away. That's a market structure shift. So let's come in and I'm dying here. I don't know why I'm recording this. Market structure shift. Energetic move lower, yes. Fair value gap. We've got one here. We've also got an inversion fair value gap that's been traded past, but we've got this one here as well. It's small, but it's still identifiable. It's actually difficult to breathe, let alone speak. Okay, next is entry within a premium. Fib from the most recent high to the market structure shift low. So is that the market structure shift low yet? I need a green candle. Okay, that looks like a market structure shift low, and it's a break as well. If it's a break of structure, let's just go back in here and look at this. Sell side liquidity, market structure break, inverse fair value gap. Yeah, there's one here, but let's just focus on the 2022 one. Let's figure out if we're in a premium discount. So our fair value gap is there. This is to stop us from entering here and then price coming back up to stop us out. Fair value gap, let's annotate that. I said this would be quick, but I still have to, there's a lot to consider. I can't really rush it, and you know, each one of these candles will be 3 minutes, so we would have more time to look at this. Okay, finally, is price above the New York Open? Yes, it is above the New York Open. Okay, so what I'm going to do is We'll go put this in here. That's where a stop loss really needs to be, so because of the volatility I'm going to use the stop loss. What should we aim for? Lowest hanging fruit, ambitious target, best case scenario, lower lows maybe. I mean, ICT did say to encourage to aim for a 1 to 5 risk to reward ratio. So now let's wait and see if we get filled. Oh my god, yep, price comes back up very quickly. Well, that's that fear. Is this, I'm going to get wicked out? Is this going to be a loss? It's okay if it is a loss. The point of this is to accept that losses happen. Okay. So what did we do wrong? Now that we've been stopped out, last thing we want to do now is enter back into a trade. I mean, now we're going to move to the sideline now, because clearly market analysis was wrong. To simulate us sitting on the sidelines, I'm just going to do this until lunch. Okay, lunch, where is it? There's lunch, right. Okay, let's see what happened. Let's just get to here before price reversed. Right, let's take another look at this. Okay. So price did go to that fair value gap. Let's just adjust this just to make it more easier to interpret. Okay. So we had the sell side liquidity taken. Then we had the market structure shift. Then we had a fair value gap within. Oh, we completely forgot about the order block, didn't we? Order block. Significant high broken. Bullish candles prior, yeah, that's there. Before changing the state of delivery. Entry was within a premium, so we'll add that as well. Price was above the New York Open, which it was, yep. This breaker isn't really going to help us now. So this would have been a target that ICT said. This would have been a best case scenario target. So did we do anything wrong here? Came here, waited for liquidity to be taken, followed all the rules, had a sort of identified a fair value gap here on the hourly, and I don't think we really did anything wrong here. It's unfortunately price just came back up came back up too much. I mean, we could have after we got stopped out been looking at, you know, could we got back in the trade here, but you know, it didn't come down as much as we were thinking, so that's a loss there, but it's an honest loss because I followed the rules. I didn't do anything stupid, so you know, I'm fine with that. I know I said I'm going to move to the sidelines, but this is demo and I'm trying to bang out more examples here. So now that we've been proven wrong and price has run that liquidity and it's gone to a discount array, now I'm sort of anticipating that you know, if price has taken, if this is buy side liquidity, then we'll see if we can find some valid entries for buy side. So let's first go buy side liquidity taken. And then we need a market structure shift, and that just means making a swing high that's higher. So got a swing high here. I don't see a fair value gap, and this actually looks like the most sensible swing high. So it's all balanced priced range right now, no gaps. Okay, there's our swing high being broken. That's our market structure shift happening there. Okay, then we want a fair value gap close to an order block. Significant low broken. Bearish candles prior to the rally that creates change in the state of delivery. So this sort of looks like our order block here. Since it's a bit choppy, I'll just kind of come out to a 5 minute, see if we can get a... Actually, on a 5 minute, this looks like the last series of down close candles, making it a little bit more clear where our order block is. Okay, let's go back to the 3 minute. Next, we need price to be within a discount, which means we need to wait until this swing high is formed, which means we need a lower wick. Keeps making higher wicks. Keeps making higher wicks. That's our swing high. Now we're moving into the... now we're outside. We're getting close to lunch now, and this doesn't mean the ideal. Okay, so I don't see any fair value gaps down here. Can't use this one here because that's within a premium. See if there's a more obvious fair value gap on a 5 minute, 15 minute. We have a 15 minute fair value gap here. I don't normally do this, I normally just stick to the 3 minute, but I'm going to take that, then we'll get back to 3 minute, and then we know that's a 15 minute fair value gap. Close to an order block as well. Let's do that. Entry within a discount. Price is not below the New York midnight open though, so yeah, we can't use that. That's no good. Let's see if we can use the breaker. A low, high, a lower low. Yeah, low, high, lower low. Last up leg in price. That'll be this. Price has already left this breaker though, so that's that's no good. So I think honestly the best thing to do here is just to no, I think we'll wait for the afternoon session. I don't normally trade the afternoon, but okay, we've got a big, that looks like, that was a nice sell model there, wasn't it? Completely missed that. That would have been in line what we thought here. Sell side liquidity taken. Market structure shift. Retreat into a fair value gap. Entry within just about in a discount there. Above the New York Open. Yeah, we there's no way we can say we caught that in time, so that's fine. Missed opportunity, so we've got a loss. Missed opportunity. Let's go with the assumption here that we're taking PM session lows. So we'll start putting these on our chart again. Right, buy side liquidity taken. There's a swing high. There's a market structure shift. I'm just going to put them in order like this actually. Market structure shift. Fair value gap. There's one here. If we go with the assumption that this most recent hang on a second, I'll go to buy. Most recent low to market structure shift high, which I guess is like here. Doesn't look like we're going to be using this one. So that's no good. Do we have a fair value gap on a higher time frame? No, not really. If we weren't using this optimal trade entry, just the 2022 model, that would be an entry below midnight open. But as you can see here, we do end up getting stopped out sometimes, so that's why I like to enter within the discount, so that you know, less chance of us getting filled if we're, you know, wait for price to get to here. I'm not really seeing a fair value gap here or anything, so can't really justify entering. Let's try and figure out where our power of 3 is. So I guess we had the accumulation, which would be all of this. Manipulation. And then distribution. So if the question is, are we still in the distribution phase now of the PM session? See how difficult this gets. After lunch ended here, we had this fair value gap. An entry would have been above midnight open. Most recent highs in market structure shift low. That would put this in a discount here. Got the market structure shift, fair value gap, entry within a premium, price above the New York Open. So yeah, this here would be actually an entry that I've missed. So I've missed 2 entries. Let's just figure out where we would have entered actually. Let's say we let's say we had more time and we saw price taking liquidity, and we figured you know, this here is the break of structure to the downside. We're still in a distribution move down. We've already done this, and then we would have to be entering under the assumption that price, oh dear, so unfortunately that would, if we were following the rules here, that would have stopped us out as well, wouldn't it? Or we could, I wonder if we say, because the stop loss has to be a place that would invalidate price, like this move up here didn't invalidate price. It's if it creates a market structure shift high. So maybe if I look at something like this and I'm like, you know, my stop loss doesn't even come close to filling the fair value gap here. I wonder if we create a rule that said like, oh, in the fair value, your stop loss has to at least cover the candle. I mean, that wouldn't get us in. So I guess just if we were just to follow this, then. Well, actually, we're not supposed to take trades until the PM session, are we? We're supposed to have we're allowed to stay in a trade here. We have the lunch session. So I mean, if we were really strict and we waited until the PM session before we're allowed to enter, then we would be able to use this, wouldn't we? So I guess that's maybe something I'll do once we go to the next day here. Just, you know, be really strict about only entering within this grey window here. See what that would have done. So you're waiting for, in hindsight, looking at that as a fair value gap, waiting till the PM session. I'm sure that will come back and bite us again though, where like next time it will be, if we'd entered before the PM session, we would have got the ideal entry. So yeah, kind of 50-50 on this one. Market structure shift, so we'll close the trade there once it started going against us. So in reality, I didn't even catch this one until afterwards. This was me going back and looking here. So this is actually a missed trade. That's a losing trade. Okay, so let's go to the next day. In fact, let's come to a daily here. So that red candle was the day we just traded on. Let's come into this fair value gap here on the daily time frame. Doesn't look like it's what is this like narrative telling us? It's traded into a fair value gap. I mean, would we still be bullish here? I mean, yeah, if I had to sort of guess what the next candle would be, after a large range, I'd expect a smaller range, because big ranges beget smaller ranges, vice versa. So we'll go into this next day here with a sort of, you know, 50-50 bias, I guess. Not expecting anything huge. Alright, so let's just skip forward until we get to the beginning of our next trading day. So that's it, trading into that daily fair value gap. Oh, that's the London session. Don't want to see what it does before I've actually traded it. Okay, so there's London. Let's see what range we're inside of. Got London session lows here. PM session highs are all the way up here. How do we get closer to the weekly open? Oh yeah, look, there's the weekly open. Okay, that should help us. So we've got very close to the weekly open now. We've already traded into taken these lows, traded back through this fair value gap, which is doesn't look like it's being respected anymore. We've taken this liquidity here, so I guess since that's the last liquidity to be taken, probably going to have to another thing, I don't like seeing this if it's coming to 8:30 and price has just been doing this. This kind of looks like the beginning of a trending day. This kind of looks like the type of price movement that's just kind of go up all day, and then that's going to be one of the worst days because it'll invite like FOMO and stuff. You know, what I prefer to see is price sort of in a little consolidation range, but we'll see what happens. Let's get all of our reminders of the rules here. Let's get the first one in place. Sell side liquidity taken. Then that's a swing low here. Morning session. Looks like a swing high here. So until I have a clear picture of what's going to happen, I'm just not going to do anything. You know, price needs to go below there to make a market structure shift. So see, this is one of the worst types of trading days, because you're just looking at this and thinking, oh, if I just click buy at the beginning of the day, it would have just gone up. And we've got an economic calendar event here as well. And we don't want to be entering trades before that. So let's just wait until, I think we're probably, yeah, I don't think anything good is going to come from trading during, you know, news. Like I said, see already, even though it's a demo, I'm getting the FOMO. I'm like, oh, was this taking buy side liquidity? This was the market structure shift. Then by the time I got to the chart, price was already cut here. And then you start in hindsight seeing, oh, you know, that would have been an entry, that would have been an entry. But it's just not as easy as that. You know, you don't have a super clear picture. At this point, we're looking at, you know, this looks like the most recent liquidity. But like I say, that news event just seems to... Just going to go to 15 minutes, see if there's anything that price is reaching for. Yeah, I mean, this looks like the kind of day. Either I would not taking a trade because I think it can't possibly go any higher. Well, of course it just does, doesn't it? Oh man, you get messed up on a trading day like this. Then that news happens. Oh, I just noticed we've got that big gap here, haven't we? That might have been... Go to 5 minutes, see if that is still... Okay, yeah, so... I'm just trying to draw something on the chart that explains, you know, why price might be reversing. Okay, then we've got fair value gap here. I'm going to see if these rules start lining up. That would be a market structure shift down there, wouldn't it? Let's see if that happens. Oh, that does kind of look like a 2022 model, but I don't really see the market structure shift low. Okay, that's the market structure shift low. Then we do a fib from the most recent high. The reason I'm not using this high here is because like price has already come into this fair value gap and like left it, so I'm just going to use that for now. We'll see. Okay, that's our market structure shift low. Is there an entry within a discount? There is here. I don't know what's going to happen yet beyond this point. I'm just going to go back one candle to where this fair value gap here is, because you know, I'm kind of skipping through here. I sometimes miss stuff, whereas you know, if I was watching this tick up and down for 3 minutes, I would have seen this fair value gap. But I have no idea if it's going to rocket up there, stop me out, or go down yet. So I just wanted to be able to annotate this before price goes into it. Price is above the New York Open, above the weekly open. Here we wait until after the news. Okay, that's meets all of our requirements now, doesn't it? I know price comes back up into this fair value gap, but I don't know where it goes after there. And you know, remember we had a loss earlier, didn't we? So, and after a big move like this, it might be tempting to think price is going to maybe kind of come all the way back down here, but I think we should just that feels like an ambitious target. Right, I guess we just have to, at this point it's like you have to accept that losing is a part of trading, and once you decide that it's met your rules and it enters you into the trade, at this point it's now out of my hands. Now I just have to see what happens. And the worst has happened. It's another loss. Let's see what happens afterwards. Okay, so we got that one wrong. We've had two 18 pip stop losses be hit now. So this is a news day on Friday. I think what I'm going to do is I'm going to just skip till Monday here. I just don't feel like, after a big move like this, what I think is probably going to happen in the PM session is, yeah, I mean, this is the type of day that could just really mess things up. Yeah, that just induces so much FOMO, you know. Obviously, okay, so this is the PM session here. Not a huge amount of volume, you know. If we'd waited until PM here, that was the range of movement we had. You know, I guess the liquidity was down here, wasn't it? That was, what was this? Was this accumulation, manipulation, and then all of this distribution? We read it wrong. That's fine. Okay, there we go. Right, let's look at a daily here, see what's happening. Alright, so that's the day we just traded on. Man, see, our analysis on the daily time frame made more sense, didn't it? Went into this fair value gap. I thought we were going to have a small candle. I thought it was only going to be a small range, but price did go to our fair value gap here, and now it's gone right through there as well. It hasn't respected this as a sell side. It's just kind of gone right through it. So until price gets to here, more, you know, have more of a bullish bias here. So right, there's London. 8:30 is here. Come into the 3-minute. Okay, let's see if we have better luck this time. So here's the low of the London session. There's the high of the PM session. We're on a Monday here, so this is now the new weekly open. Let's just, yeah, let's just wait and see which one of these, you know, two levels gets broken. Is that going to be is that going to take liquidity? Or is it just going to confuse me? Okay, yeah, looks like we've got equal lows down here as well. That makes sense. Okay, now we're below the New York Open, so I'm going to assume that this is buy side liquidity being taken. We're below the New York Open. Now we need to wait for a market structure shift. You know, or our bias is just wrong and we just completely missed the point of the day. Right, there's our market structure shift. Next, we need to see if we've got a fair value gap. Which I'm not seeing anywhere. Before price actually takes off and does anything, let's go look at the 5-minute, see if there's one there, see if there's one on the 15-minute. See if we can find a breaker, low, high, lower, low. I mean low, high, lower, low. Not really providing any clarity. I'm just gonna go with this 2022 model. I guess we could say if price gets above here, that's a stronger market structure shift. Unless maybe it's possible we just got this wrong again. You know, if this is the last area of liquidity that was taken, and again here, still I didn't really see a price coming back into these fair value gaps here, so that's fine. I'm just hoping we get a market structure shift with a fair value gap and I can actually enter in a trade. I don't want to force a trade. Okay, we've left the the morning. I don't really see a setup, although we do have price coming back in. Here's a question now. So, what's the last liquidity that was taken? Last liquidity that was taken is buy side. So I don't want to use this as a fair value gap here. I'm looking at this being like, oh, maybe that's the fair value gap and price is going to reject off there. But I'm going to sit on the sidelines because I'm just really confused. Let's wait until the PM session. Let's just wait for lunch. We'll just wait until we see the grey here. Okay. Alright, did we miss anything? Stayed on the sidelines here because we didn't know what we were doing. This is some weird price action, like, ugh. You know, I don't regret being on the sideline here. This is just every move of the day is literally a stop hunt. Every candle was a stop hunt. What's the last level of liquidity that was taken? That would be here. Let's find our... Okay, so sell side liquidity being taken. I mean, even if this is sell side liquidity being taken, do I see a fair value gap in here that looks like the type of thing price wants to go to, or is all I see is noise and I'm just trying to force a trade? Because I'm just looking at this and just like, maybe this is going to be the second stage of this distribution. If this was accumulation, this was manipulation, this is distribution, the first stage, then there's a consolidation, and then this is maybe the second distribution stage. It depends if we want to treat this as liquidity here. So I guess we'll say, yeah, look, buy side liquidity was taken here. I mean, this being taken is, I think, more significant than this. So we're... Oh, but if we... Oh, no, if we want to sell, don't we? Yeah, okay, because we're above the... No, actually, I just said buy, didn't I? And we need to be below the New York Open to buy, so that's not going to work either. Okay, before I skip this, I'll just have a look at the bullish breaker. Low, high, not a lower low. I got to stay on the sidelines here because low, high, lower low. Right, just before we see what price does for the PM, let's just go back a bit. Low, high, low, 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 high, low, low. That doesn't really look like a very strong breaker to me. Low, high, low, low. I mean, I kind of saw this fair value gap here, and I kind of wanted to justify being able to enter it, but I'm going to just... if we don't see anything by, say, 4 here, then... remember, for liquidity, I like to see a candle close above it. I guess I'll just mark out PD arrays and just be an observer here. Yeah, that's 4. Not going to see much after that. Okay, let's do one more day. So we're still at 2 losing trades here. Which is better than entering, you know, when we're not sure. We've only racked up 2 losses. Still quite manageable. Okay, let's just do this again then. Let's mark out we've got the lows of the PM, equal lows of the London, and we've already broken the PM session highs here, which means the next area of liquidity is the London session highs. So once again, we're just going to wait. For the morning session, try and find out where our Judas swing is. What on earth happened there? Okay, that's a news event. See why we don't want to trade news events. So I guess we're just going to avoid this news event. I don't really know if this is a Judas swing or just volatility because of the news. You know, I'm just going with the assumption that this is sell-side liquidity and waiting for a market structure shift low. I just want to see one setup that makes sense. Like, this price action is just dog shit. You get one big move to induce loads of FOMO. You buy here, and then price just for like the next 3 hours barely moves. Right, that's a fair value gap. That's a market structure shift. I think I need to have a real think about where news events fit into my rules here. Right, price is above the New York Open. Sell side liquidity has been taken. We have a small market structure shift. We have a fair value gap here. I think I'm just going to use my better judgment and just say that because of that news event, I'm just going to avoid the morning session altogether instead of taking a short position here. Yeah, I think we made the right call. Because that would have been our maximum stop loss. Okay, yeah. Yeah, what's the point? I had this news. I haven't got anything here that looks like, you know, clean price action. Like, what's the point? Let's just see what happens over lunch. Okay. At least now we kind of look at this as liquidity being taken. Well, it was taken back here, wasn't it, with this high. Then we've got a market structure shift. Goes below this big swing low here. And we've got this fair value gap. If we go from the most recent high to the market structure shift low, so the most recent high is here, isn't it? And that's the market structure shift low. I think when I say the most recent high, I think we should probably be using the high that broke the liquidity and then, you know, keep moving it to the most recent market structure shift like this, because otherwise this just doesn't make that much sense to me. It's not a huge difference. So the question is, are we going to enter a short? We said we were going to, to be fair, we said we were going to wait until the actual PM session, didn't we? Can't be one rule. Okay, here's the PM session. I need to get some more context on what's really going on. I'm just going to go back before lunch here so we don't see what happens, then go to an hourly so that we're only looking at lunch. And let's just see what's happened here. Now actually look, by doing that we've just seen this major sell side being taken. Okay, I think that gives me a bit more confidence to be a short seller. So let's go back to when the lunch was over, when the PM session actually started here, and then I'm going to enter in our trade prices right now, which is here, and then we'll use our stop loss and see what happens here. Target the last low. This might be 3 losses in a row, but let's just quickly check that we've definitely followed all our rules. So the sell side, the liquidity was taken, and a market structure shift. Price is above, well above the New York Open. Entry at this point is within a premium. Discount, sorry, for premium for a sell. That's what our standard deviation is. But if you know, we're just gonna have to do this, and we're just gonna have to, if it's a loss, then we'll have some real stuff to analyze. Okay, I'm not going to lie to you, I want this trade to work out. Let's start looking. I'm going to look at my invalidated if statements quite carefully this time. Broken an old low, that's fine. And we've got a fair value gap here. Price leaves the sell side in balance, creates another swing low. Now, the most lowest hanging fruit objective is here. Let's just see what happens. Price is kind of in a void between this fair value gap and this PD array, so it kind of has to go towards one or the other. It gets there. Now, is it going to keep making equal lows here? I'm kind of expecting price to go through here, make a retracement, because we're starting to create a new range here, aren't we? So I'll make a note of this fair value gap here. Kind of hoping that, you know, this is a breakaway gap or something, but okay, as anticipated, price. Important thing is we've made a swing low here, which is encouraging. I'm prepared that price might want to come back up to that fair value gap here. Need to, okay, it goes in there. Goes right through it. Comes right back up to the fair value gap. I think if price goes through there, we're just going to have to end this. See, I was hoping we'd get like a swing low, and if the swing low was, you know, failed to break a low, then we could have. But if price just starts ripping up, that's kind of the worst case scenario. Oh man, that in hindsight, this might have been the buy side liquidity because of all the equal lows. And yeah, what I'm going to do here is before we let the next candle be green and just stop us out, I'm just going to come in here and close this out before we take a big loss. Okay, so this is one of those times where, you know, if I'd gone with the low-hanging fruit objective here, like ICT said, which is kind of what you're supposed to do in the beginning, just try and get the low-hanging fruit objective. But I was hoping we would get like a market structure shift low. Home price would come back up, you know, maybe make a failed market structure shift low, and then we could get out, but you know, it just fucking went against us. So yeah, that's very annoying. We've had so that'd be, you know, 3 pips loss there. There's still a chance that, like, when it was here, that price might have just been wanting to come back into this fair value gap one more time, but wasn't to be. Okay, let's go do one more day. I'm hoping that after 2 losses and a almost break even, we can try and get a trade that makes up for it. Again, I just keep like going back to a daily time frame. I keep coming up with like a bias that's bullish, and then when I go down to the 3-minute, I just completely forget about that and keep taking trades in the opposite direction. I'm actually really disappointed here because it's fine to take a short trade when our bias is bullish. Like if we just go back to here again, before we knew where this was going to go, we'd already looked on a daily time frame here. Oh wait, no, we were looking at it on the hourly, weren't we? No, we were looking at it, okay, before we knew what was going to happen on this day. Price had delivered from this fair value gap. It'd broken this fair value gap, not respecting it, and we said that there's a strong possibility now the next area it's going to want to go to is this sell side imbalance up here. And that doesn't mean you can't take any short trades if they're valid, but if you have a choice between, you know, is it gonna be a large trade to the move to the downside, or a smaller, more conservative move? That's where the daily bias was supposed to come in and say this is probably just a smaller retracement, not a huge run. So that's actually kind of really disappointing that I've completely overlooked that. Yeah, if we'd I should really just write in big bold letters here, like do you think maybe if I do something like this, maybe I won't keep forgetting? What if I just have like this, like right in front of me? Because then when we'd entered this trade here and it started going in our favour, the only narrative I was taking into consideration was what I can see on a 3-minute chart, and we were trying to debate like, well, you know, is price going to come and do some amazing move like this? Well, if our daily bias is bullish, we should have just seen this as like a small opportunity, aimed for a low-hanging fruit objective like this. Again, it's hindsight. Did not do that, so. And then is our daily bias still bullish? So this is how Tuesday finished. Big up close candle. Now prices taking the sell side liquidity, traded into, we've got a volume imbalance here. After a big range like this, I'm not really sure now. See, you know, on this day we had a strong likelihood of being bullish because we were close to this sell side imbalance. We've actually taken both of these now. Then now the next area is up here, and kind of difficult to say whether, you know, price is going to go up there, or if it's going to now want to do a sort of smaller consolidation or something. But it's fine, we'll go to Wednesday then. I mean, I've got to be realistic, like at some point in January I'm going to have to do this, you know, on a live market without the benefit of hindsight. Okay, I've already seen what's happened now, so damn it. Okay, so let's just say we came to the chart a little bit late here. Maybe we're on the toilet or something, we didn't catch this morning session. And we've got the London lows, the London highs have already been taken. Now we're waiting for a Judas move. Looks like this might have been the Judas move. Wait, what is this big red thing here? Is that the volume imbalance we were looking at? Yeah, I think so. Okay, so I think this was the volume imbalance, some kind of PD array above the midnight open. We've gone above sell side liquidity, so I'm looking at this as potentially the Judas move. Check this, another news event. Oh my god, it would have just been better just to say there's a whole bunch of news events clustered together. Problem is, like, the reason that this is an issue, this news event here, economic calendar, is because now we don't know if this sudden burst of volume is a genuine Judas move, or if it's just complete volatility caused by the news event. And I think we've said that, like, if there's a news event in the morning, we're just going to wait for, like, the PM session, because it's just like, yeah, it's fine, I'm just going to wait until the afternoon session. We'll look at the morning and decide if we missed out on anything. Okay, did we miss anything here? Like, do we regret not trading this morning session after the news? We were looking at this, probably would have been saying, is that an entry? Price doesn't fill us, that's fine. Then price takes this liquidity here, so then we're looking at this as an entry. There's this tiny fair value gap in here. Price has to be below the midnight open, so if we did convince ourselves to take this trade, we'd have had to do something like this, wouldn't we? Initially we'd have a target like that, and then kind of just goes against us. Okay, so I don't feel bad about just being on the sidelines for the morning here. So yeah, that's kind of, let's go with the assumption now that we're in a distribution stage, and let's just wait to the PM. Let's see if haven't looked at this breaker strategy in a while. Low, high, lower, low. Low, high, lower, low. Last up leg in price. That's the breaker. And then we simply just, with the breaker here, we can just look at buy side liquidity taken. That happens here, equal lows. Market structure break. Market structure break. Well, I guess that's here, isn't it? Close above a swing low. So low, higher low, lower low, higher low, lower low, higher high, closed above. The low of the breaker took out you know, any major low of the overnight session. Then we go with a inversion fair value gap. Price has to close above that. Entry has to be within a discount as well. The discount is from the low to the high of the breaker. That's the discount here. Price has to close above that inversion fair value gap. Is it going to close above it? Not quite. Not yet. Okay, there we go, closest above it. And then we simply hope that price comes back in to this discount area. Put that here, the stop loss has to be below the breaker. And then we'll aim for, since we've had 3 losses, I think maybe we should take our own advice and go for low-hanging fruit, assuming we get filled and we don't get stopped out. Right, is price going to stop us out? Have we completely got this wrong? Guess we're going to find out. That's not looking promising. It stops us out. This is where I can feel it already. This is where, like, let's just sit on the sidelines now. Just simulate that. Do we have anything about? Okay. Doesn't look like that was a breaker at all. This is just the reality of, I mean, I said at the beginning of this session I wanted to get over my fear of losing, didn't I? I said I don't want to make these videos because I'm worried that I'm going to keep making losses on screen and then coming here and having to explain it, but I mean, this might very well happen. I mean, we've seen plenty of examples of the concepts working out really nicely. I think on the next session I'll come back with a clearer mind. We'll go back and look at each one of these days here. We did, how many days do we do? Okay, so we did the Friday. Oh no, sorry, we did the Thursday. Had these 2 trades here. Remember, this was the one we didn't take. So I'm just going to write something about this, just to say it missed. So I can't come back in hindsight and say we would have taken this trade. Okay, so we had a loss. Didn't take that trade. Stayed on the sidelines. Took this one. That was a loss. What about that other rule I said where I was only going to take 3 trades a week? So a maximum of 3 contracts a week, I said, as a precondition for being allowed to use an 18 pip stop loss. So that's 1. Come on a Friday, that's 2. On the Tuesday, that's 3. And then that was 3 losing trades, and actually in exchange for being allowed to use such a large stop loss, I said only 3 contracts. So at this point, we'll just make a note of that. I guess, say, because this was almost break even, we're going to say, oh, we took a 4th one, but, you know, I think next time we should just stick to 3. Because if we're only allowed to do 3, then that will force us to really cherry pick the best setups. And I think it's going to be really interesting to come back, you know, when I'm refreshed, look at all of these again, because I mean, this could have happened in January when I started trading this live. This could have been my introduction to live trading, and I'll be like, you know, have I just failed to learn any of the ICT stuff? Yeah, it's difficult to make this kind of video, but it has to be done. I have to look at the ugly parts of trading and say this might be the reality. You know, losing is part of it. Maybe some of these were valid trades that we didn't need to do anything different. Maybe some of these were mistakes that could have been avoided. I don't know yet. I need some real time to reflect on this, but I think it's been a pretty honest journal. Not the journal I wanted to make, but I think the journal I had to make. because it's all about being humbled. And maybe after this I'll discover something that will actually be beneficial moving forward. So hopefully we'll find a silver lining to this. Okay, thanks for watching, and let me know what you think. Bye.